This is Randy Finney with Right Side of the Chart, and today is Friday, June 23rd, 2017. I think it's time for another update on the cannabis stocks, marijuana sector. For those of you who followed the site for some time, you know I've been hot and cold on this sector, on and off, covering it for at least the last year and a half, maybe 2 years. Early 2016, maybe sometime in 2015, I started picking up and covering these stocks, and we've done very well. Back in 2016, leading up to the presidential elections, at the time, my last update, well, not my last update, but around November 8th, right after the elections, in leading up to the elections, I talked about a buy the rumor, sell the news thing. And when you look at the charts on just about all of those, I'm referring to the U.S. presidential elections, in which, a lot of the states had medical or recreational marijuana on the ballots to approve that legally, and that did go through. But as I say, that's the stock market. It's called buy the rumor, sell the news. It was already priced in. That's what the big run up was for. So fortunately, we were able to sidestep a lot of those, and it was reflected in the charts. You see the divergent highs leading right up to the late October highs there. So no surprise, you can see the negative divergence. And this is just one of many. Before I get into the charts, and I'll probably have to split this video up into two separate videos, I have a total now of 40 cannabis stocks on my watch list, my marijuana-related stocks. 37 of those I have flagged right now as charts that look interesting. They've either recently broken out or have levels that we can watch, and they could be close to breaking out or maybe pulling back to support. So before I get into the charts, a few quick points. I've gone over this in the past, but here's how I like to trade this sector. This is a sector in its infancy. You can equate it somewhat to, let's say, the dot-com stocks back in the late 90s. Most of those, we all know what happened. There was a big bubble. A lot of them went bust. They didn't have sound business models. They just had the name .com, .com, pets.com, whatever it was at the end of their name. And people bought them for that reason. I think there's a lot of that going on here. If you've got the time, go all at it, do your due diligence, fundamental research. I have done that on several of these companies, some of my favorites, but on others you go off the charts. And where I'm going with this is inevitably there will be winners and there will be losers. Some of these stocks will go to the wayside, probably go down to zero, nothing, declare bankruptcy, be worthless at some point. But just like the dot-com stocks, I take a shotgun approach to this sector because there will be winners and losers. For example, if you bought Amazon.com back in the 90s, guess what? It doesn't matter if you did spread your money out, and a handful of those stocks, those tech stocks back then, are today's mega cap companies that have gone up manyfold. So that's the same approach I'm using here. And you can certainly use stops, but on that note, you also have to use very wide stops. These are companies that on a good day, I've seen some of these stocks go up 20, 30, 40, 50% and more in a day. Likewise, they can drop 10, 20, 30% in a day. So the volatility is so much is that if you normally allow for an 8 to 10% stop loss on a position, you will be stopped out just on the day-to-day gyrations on these. So what you do, you take a much smaller position size. They're very speculative companies, especially those lower priced ones. Be cognizant of the price. This one here is at $2.23, which is it's one of the larger ones. There are some of these that are a penny or under a penny a share or a few cents a share. So look into it. Look at the market cap, and factor in that the gain potential is above average. You can make on a lot of these. If they pan out, I'm looking at gains of the measure into the triple digits, 100% or more. Therefore, you can allow for a 30, 40% loss if you take a small enough position size. So everybody's different. If you normally trade stocks and on an average of 10, 20,000, in a position, 50,000, maybe only 2,000, depends all on how much money you have. You only need to put a couple $100 to maybe a couple $1,000s in most of these names. And again, the smaller companies, lower share price, smaller market cap, obviously less money because there's more risk involved. Those are more speculative. That will then allow you to run a 30, 40% or more stop loss on these if you need to, because you're shooting for 200, 300, 400%, maybe 1,000% or more in the coming years. All right, so that's point number one. Wide stops. And most importantly, when charting these, as I go through these charts, you must use log scaling. That is imperative. Anytime you have a stock, and for example, this one here on the chart, it's ranged from about 9 cents a share up to about $6 a share. This is log scaling. Log scaling takes into account, it plots the candles and the moves in the stock merely based on percentage gains and losses, not points. You go into the point move and it gives you different, look how distorted the chart is. And there's some that it's even more pronounced than this. So again, that's arithmetic or linear scaling. This is log scaling. And I highly recommend that for these stocks because of their wide price ranges. Or any stock for that matter that has a pretty wide price range. All right, so those are the trading tips. Spread your money out, shotgun approach. And then finally, there are a few sectors that I trade, that I've traded for many years. For example, the gold mining stocks, the shipping stocks, where the components move in very close synchronicity to one another. In other words, that gold mining stocks may trend sideways for a while. All of a sudden, they break out of a well-watched technical level, let's say GDX. And what you'll notice, of all the components of GDX, 90+% or so on when GDX is up big, one of its big 5% days or a big down 5% day, 90+% of those components are going to be up or down with it. They tend to move together. Not all sectors do that, but in gold mining stocks, shipping stocks, I see that a lot. Once they start breaking out, the momentum players come in. Same with the cannabis sector. So right now, the momentum is obviously to the downside. So what you want to do is have your own watch list, because unfortunately, although there is an ETF out there, it's brand new. I don't know how well a job it does at tracking the sector. Put together a watch list, and what you want to see, if you start seeing a good percentage of those stocks all breaking out within close proximity, I'm talking over a period of a couple weeks, couple days, especially moving up on volume, that means the momentum's in the sector. That's when you want to engage it more aggressively. Right now, again, this is just a sector setting up. The trend has clearly been bearish since the sell-off of the presidential elections, after the elections. The buy the rumor, sell the news. I talked about that again on November 8th. Actually, I talked about leading up to the elections and then covered it in a video on the day after the elections. So, all right, here we go. We're going to go through these charts one by one. My favorites, and I'll pause. I'll stop the video when it gets to the point where it's gone too long, and then break it into two parts if we need to. ACBFF. There are only a couple that I like so much. Did the fundamental research, due diligence, and added those as official trade ideas. This was one of them. We started buying this one. Me personally, posted on the site way back here at, I think 55 cents a level. Yeah, the 55-cent level. The stock ran up to about $3 and has since consolidated. Now, what I had to do here, you might have noticed, it's driving me crazy that they won't fix this. Every charting service I use has this errant candlestick. It's for some reason, and the reason it hasn't been corrected, there must have been a print down at about 0. It was 0.001 or something. If you look at that candlestick, yeah, there it is, a low 0.0010. So somehow there was a print and it didn't get undone. It should have been undone, should have been corrected. I cannot remove this candle off the chart. Makes that chart ineffective. You just can't make heads or tails of it because of the scaling. So what I have to do is go back here, and this is what I've talked about in the trading room. The 150-ish level is a pretty key level. We recently dipped below it just briefly, but as I posted in the trading room, we got back above it, and that's what I was looking for. So as long as the stock holds above there, this is just healthy sideways consolidation, and I think longer term this one still has a lot of potential. So one of my favorites, but I can't really give you a good chart picture right now, again, because when we look at this, that candlestick just messes everything up. So here it is. There's that 151-ish level coming through. I just, again, long term, I like that one, and as long as it's above 151, it looks good. AeroGrow, well, you can see there's that, large rising wedge, divergent high leading up to right before the elections. There's the post-election sell-off, bear flag. Some of these stocks behave very well to the technicals. What I'm watching right now is simply, this is a stock at support. You can see the support levels here, these two lines. There's reactions back here, some reactions here. So we fall into support. It is still in a downtrend, so it would be aggressive, but you could certainly take a shot here with a stop somewhat below, or wait for a break above this downtrend line. Pretty well-defined downtrend line. And on all the charts we're going to go through, any horizontal lines that I have above are potential price targets or resistance levels, whereas any lines below are support. So this one I can see easily, if it does break above that downtrend line, I think 293 is a minimum target. And again, if the momentum starts to come back into this sector, there's a lot more upside. Ultimately, I think a lot of these stocks will go on to break above their November, late October, early November highs over time. So there's just tremendous potential. And again, don't forget the power of a log chart. It might not look like much, even some of these little rips and dips in here. But if that heads up just to that 293 area, that's a 40% gain. AMMJ. AMMJ looks good. 33 support. You can see the support level. You can see this reaction right here, reaction back here to the left of the chart. But most importantly, it's this downtrend line. So this will be a common theme in this video. You're going to see a lot of stocks that are pushing up against downtrend line resistance. So again, the more you see pop above those resistance levels, you'll also see some horizontal resistance levels above. So ideally this one, you want to see it first pop above the downtrend line. Additional confirmation will come on a break above 52, and then this is a pretty key level. You can see how well that 66.15 level, or 0.6615 level, acted as support for months back here, and then finally gave way, was tested back from below. That additionally validates that level as a key level. Former support then becomes resistance once broken. And, takes that out, this is your next buy signal or bullish technical event, a break above the we'll call it 106 level, and then it challenges the highs. Support, if it doesn't hold this level here, we have support at 33. I have a very solid support level here, about 20 cents, we'll call it roughly. You got to round off. I don't have these numbers zeroed out exactly. So those are your levels, and how you want to trade it, it's up to you. You could certainly, it is certainly objective to buy here back on a pullback to support at 33. Not so objective to go long just before when you're pushing against resistance. You're so close to that downtrend line as well as that 52 level. You might as well just wait for the 52 level to get taken out before adding to that one. So again, either on a pullback to support or a break of resistance. But right now, wouldn't be a very objective level to add on to it, or to initiate a position if you don't already have one. There's APHQF. Not crazy about it. It already played out. Here's the correction. This was, see the negative divergence. You had a divergent high. And I can tell you this, it's about played out to its wedge measurement. You just take the widest part of a wedge, which I'm doing here, add that to where a wedge breaks down. Well, actually projects down to this level. So here's a resistance level, bullish if it breaks above there. We don't have to play out to the full move of the wedge, but if we do, that level's about 312, 313. That would certainly be an objective area to add exposure. And again, with stops below, wherever you want, these are support levels. You can also, another thing besides a shotgun approach, I like to scale into these positions, meaning add lots strategically on pullbacks to support, on breaks above resistance, etc. ATTBF, Abattis Bioceuticals, very nice support level. If you look at this chart, it's actually a support zone. You can see reactions back here in the past. Then we broke out, we broke above that, that was resistance, and we came in and just look how well this thing back tested that level for months, several months. Rallied, came back, back tested again, here we are again. This is trading 101, folks. You buy when you're trading on the long side. there are basically two times to buy. You buy pullbacks to support, or you buy breakouts of resistance. So this one offers an objective long entry here at support with a stop somewhat below the bottom of that support zone, or on a breakout above this very well-defined downtrend line. And you can see these are my near-term targets. And if it takes out this high, it's smooth scaling, blue skies ahead. So there's a lot of potential on that one. CANN General Cannabis Corp. Here's a breakout right here. I mentioned this in the trading room not too long ago. I came back to this 120 support level, ripped from there, took out the downtrend line, broke out. There was a resistance at $2, and it had what I call a momentum-fueled overshoot. See that strong, very impulsive move up? It's a lot of upside momentum. It's very common to see a stock overshoot a resistance level temporarily, just due to that momentum, and then pull back in. So that's what it did. It broke out, and it's pulled back, and it's back testing the downtrend line now. It's a hair below it, but effectively with these things, they swing so much, I consider that a back test. It's still on it. So there's an objective long entry there. And you need to take out that previous reaction high, and any of these are levels. And over time, again, if you're looking even as a swing trader right now, and you're saying, well, Randy, I don't want to game all these these smaller micro levels, if we'll call them, of support and resistance or targets. A lot of these stocks just target those November highs. I'm sure there'll be some type of reaction if and when we get there on those. And on a stock like this, what is that in percentage terms? If we get up there, 207%, not bad. Even if you only threw a few $100 in there, $500, you're making a couple $100. Next one up, Cara. As you guys know, this was an official trade. This is one that I've harped on as one of my favorites, both technically and made a strong, what I believe a strong fundamental case. I really like what they're working on. It's not a direct, they are not growing cannabis. I've talked about it in the past. Again, I don't have time to do it in this video. It's more of a pharmaceutical or a biotech company, and with painkillers, and some of those are cannabinoid-based receptors, and the other ones are opiate. They're just trying to find less addictive painkiller drugs, because as you guys know, that's a huge problem in this country right now, is the addiction to painkillers. So the market potential for this one, whether it's a buyout candidate eventually, or just goes on its own, it's just done great. And it works well. It trades well to the technicals. These are levels. I don't believe I've touched any of these lines in a long time. We started buying it back here. We had this triangle breakout right here, came back, tested the triangle. I'm talking about this white symmetrical triangle. We had this uptrend line, broke down there. We had a little wedge, broke down, came back, pulled back to support. It digested, it consolidated, digested these gains. And then just the other day, I mentioned it was making another run at this 1810 level. I've had that 1810 level is ultimately back here. That was my long-term target at the time, and we hit it back here. Overshot it a little bit, came back in, and it has acted as resistance recently. Again, I have not touched this line in months. I created that trend line, as you can see there, back in November of 2016, and you can see the attempts, intraday attempts to break out, failed. Intraday attempts, failed. Finally, we took it out, and we took it out with an impulsive green candle. That is technical analysis 101. That is a breakout. To point out the other day, we shot right up, hit my $21 target, pulled back, and then popped up today and hit that next and final target right now. And that's a key level because that's the previous all-time high. It's testing that. So, if you took the breakout, and I think I said in the trading room the other day, it would be, what is that? It's about a 27% run from there. Not a bad time to take some profits, but you can also take the long-term approach and tuck this thing away, set some reasonable stops just in case something happens to the company. At this point, the stock should really hold on any pullback. 1810 is now a pretty good support level because that was our breakout. That would be a reasonable stop, but you really don't want to see it get below this level. That wouldn't look good for the longer-term case. CBDS, Cannabis Sativa. Looks like a wedge type pattern, but more importantly, watch this downtrend line. There's a downtrend line. There's some resistance. We can see it here. I know there's a lot of lines on my charts. It might look busy to to a lot of you guys, just pause the video and take a look at these charts, if you will, and try to replicate these levels. So this one bounced off the bottom of the support zone. It rallied up and it's coming close to testing the top of that support zone. And so you can either buy it anywhere here down to the bottom of the support zone. There's a trend line. If you look at it, it comes in. Let me clear out those lines. Go back 2 day, you can see that downtrend line, so it may want to come and back test that downtrend line there. That goes back 4 years. Now we're back to a 2-year chart. Again, that's the downtrend line it needs to take out. And then we have horizontal resistance just above there at about 555. And then again, like everything else, probably challenge the previous highs. Those highs actually came back in January on that one. CBIS, Cannabis Science. Downtrend line, stocks at support. You can see reactions going all the way to back here, so you want to break that downtrend line. All right, I think even though we've only covered, we'll cover 10, make it a nice clean number, and then I'll move on and do the rest on another video. CCAN, downtrend line. I mean, this one's simple yet effective. Wash, rinse, repeat. You see these downtrend lines, you get a breakout. Again, it might not look like much. I'm going to have to go over here to give you the measurement, because if I grab right here, it'll move the trend line. So I move off to the side. So that run didn't look like much, but that was about 100% run right there after that breakout right here. Did it again, broke out there. If I put the line right there, that ran up about 40%. This one might not look like much, but from there to there, that was about a 30%. So you get it. It doesn't take a lot in these things. They move quick. There's an 80% run. This is a pretty steep downtrend line. You have potential divergence here. Definitely divergence on the RSI right now. It's 25 cents a share. If it breaks out, I'd see it. I'll tell you what, I don't think I'd sell this one until it gets up here at about 55. That would be my initial target. And that should be good for a gain of about 117% if it gets there. All right, I'll stop it here. I spent the beginning of this video talking about tips and strategies for trading the sector. So in the follow-up video, I just have to go through, oh goodness, I don't know, 30, a little less, 27 stocks, and it should probably run about the same length. All right, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.